So do you remember those 80s cartoons where the ostrich would hear danger and do the classic head in the sand movement, hoping that the danger would pass him by? Well, basically, that's exactly how a lot of people deal with their fixed rate mortgage coming to an end. And sadly, unlike in the cartoons where the ostrich has got his head in the sand while Acme Bank sits in the background and everyone waits for the theme tune to finish, when your fixed rate ends, you usually move on to what's called the standard variable rate. And this can be about as unpredictable as the British weather. It's kind of linked to the bank base rate, but it's not. And it's usually at least a couple of % higher than what you would be paying if you were on a fixed rate deal. It does tend to move up and down with the Bank of England base rate, but it's entirely at the discretion of the lender. It's not a tracker by any stretch. So like with the British weather, one minute it's sunshine, the next minute it's pouring payments. And some people really do think, I'm just going to leave it, it won't be that bad. But that ostrich moment can absolutely cost you a fortune in the long term. So what actually happens when you do actually get moved onto the standard variable rate? Well, for one, your payments can jump up with very little warning. And then either when the base rate moves or when your lender decides, the interest rate that you're being charged could move up or down. And it really is at the lender's discretion as to what happens next. And remortgaging really isn't that hard, so why would you not do it? It really is like not getting your MOT done because you think your car's going to fail. Most lenders now will let you lock in a new deal between 3 and 6 months ahead of time. And then even once you've locked in a new deal, potentially if rates drop after that, we can still swap the deal out. But if rates go up in that period, then you're protected. You've already got a deal locked in. There's pretty much no good reason for not wanting to get a rate locked in early. And one of the dangers of doing it yourself is that, as I've had with one of my clients recently, they locked in a rate with their lender, but the lender didn't bother to tell them that rates had since dropped. So when I checked out the deal they were getting, there was actually newer deals available at 0.3% less. And all he had to do was phone his lender, tell them to cancel the existing deal, then I could go in and do a product transfer for him. And yes, it is simple enough to do a product transfer yourself with your existing lender. But if you do that 3 to 6 months in advance and then rates drop, chances are your lender is not going to tell you, whereas a good mortgage broker would. So if your fixed rate mortgage is due to end this year or early next year, then don't be an ostrich. And I absolutely promise you that pulling your head out of the sand and talking to a broker is a lot less painful than getting pecked by the standard variable rate in a few months' time. I'm Patrick Weightman, your local East Midlands mortgage and protection advisor. I work with clients up and down the UK, and my links are in the bio. Speak to you soon. Bye-bye.